Imagine a world where the barriers between you and valuable assets just disappear. What if you could own a tiny piece of a Manhattan skyscraper, stake a claim in a Picasso masterpiece, or trade blue-chip stocks at 3 in the morning on a Sunday? And what if you could do all of that without a broker and without waiting days for your transaction to clear? This isn't science fiction. It's the world of tokenized assets. It's exactly why Wall Street titans and Silicon Valley innovators are watching this space so closely. I'm Bola, here at the Binance Studios, and today we're diving deep into one of the most transformative ideas in modern finance, tokenized assets. We'll break down what they are, how they work under the hood, and most importantly, why they could completely redefine what ownership means in our digital age. So let's start with the basics. What exactly is a tokenized asset? In simple terms, it's a digital representation of something tangible that already has real-world value. Think of things like stocks, government bonds, real estate, or even a collection of fine art. But here's where it gets really powerful. Normally, your proof of ownership is buried in a bank's database or sits on a dusty piece of paper. With tokenization, your ownership rights are recorded on a blockchain as a secure, unchangeable digital certificate. Now, that might sound a bit technical, but this simple shift unlocks a revolution in flexibility. Because once that certificate lives on the blockchain, it transforms the entire experience of ownership. Suddenly, you can fractionalize it. This means thousands of people can own a piece of something that was previously only accessible to the super wealthy. You can transfer that ownership in minutes, not days, escaping the slow, outdated settlement process. You can even program these assets with smart contracts intelligent code that automatically handles things like dividend payouts, interest payments, or rental income, all without needing middlemen. In essence, you're taking the old concept of ownership and giving it digital superpowers. Now, you might be surprised to learn that you've probably already used a tokenized asset, especially if you've spent any time in the crypto world. Stablecoins like USDT and USDC are perfect examples. Digital tokens backed 1-to-1 by actual US dollars and government securities held in reserve. These tokenized dollars have become the backbone of blockchain finance, processing billions in transactions every single day and acting as the crucial bridge between traditional money and decentralized systems. This proves a critical point. The infrastructure for tokenization isn't some futuristic theory. It's here, and it's working right now. In theory, you could tokenize almost anything. Right now, the real excitement is focused on financial products, government treasuries, investment funds, and stocks. Let's zoom in on tokenized stocks, because they really show how transformative this technology can be. Traditionally, if you want to buy shares in a company, you have to go through a broker. After the transaction finally settles, you technically own the stock, but you're stuck. You can only trade during specific market hours, and your access might be limited depending on where you live. Tokenized stocks completely demolish these limitations. They are blockchain-based tokens that mirror the exact value of real stocks, typically backed 1-to-1 by actual shares held securely by a custodian. When you buy a tokenized stock, you're not getting the underlying share itself that stays safe with the custodian. What you get is the digital token that represents your ownership rights and all the benefits that come with it. This setup creates unprecedented flexibility. You can trade 24/7 from anywhere on the planet. You can buy tiny fractions of a share, making high-priced stocks accessible to everyone. And settlement happens in minutes, not days. And this isn't just a hypothetical idea. BlackRock, one of the world's most powerful asset managers, launched its own tokenized US Treasury fund back in 2024. By 2025, that fund had already grown to nearly $3 billion in assets. Some crypto platforms have even started accepting tokenized stocks as collateral, which opens up entirely new financial possibilities. This shows that tokenization has moved from being an abstract concept to becoming real. Functioning financial infrastructure that's already reshaping how people acquire, trade, and access capital. The momentum is undeniable. Our report from McKinsey projects that the market for tokenized assets could explode to between $4 and $5 trillion by 2030. That's a staggering figure. It highlights the sheer scale of this transformation. Even though we're still in the early days, The path forward is crystal clear. Tokenized assets aren't about inventing entirely new things to own. They're about taking the assets we've known for generations: stocks, bonds, real estate, and giving them a much-needed digital upgrade. They make these assets faster to transfer, dramatically more accessible to everyday people. It's perfectly suited for a world that trades and operates 24 hours a day, 7 days a week. That is the revolution happening right now. Thanks for joining me on this deep dive into the future of ownership. What asset would you love to see tokenized first? Let me know in the comments below. If you enjoyed this video and want to stay ahead of the curve, don't forget to like, subscribe, and hit that notification bell for more insights from the Binance Studios. See you next time.